Yo, what's up? This is my Netflix and chill right now. But what a morning. Kind of muted. I think if you're not subscribed, by the way, to the newsletter, we sent out exactly where, ooh, look at that, exactly where we think SPY has to hold, and we are doing it. So possibly good news for the bear or for the bulls. What's up, big dog? There he
Hey,
is.
how you
Shark
doing?
in the house. What's going on, man? Did you trade this morning? I'm trying to move this microphone a little bit.
Yeah. I traded a bit, and I took a long, and I cut it for a loss, and I tried again, and then I got it for
So, truth be told, I just took a long.
a
And I'm just
win.
gonna let it cook, man. Just
Yeah.
gonna let it cook. We got our NFP secret sauce, but we'll see, man. So, welcome, by the way, guys. Appreciate everybody tuning in. Appreciate Sharky most of all. I'm telling you, dude. Since you've been hopping in on this, it's been a lot more fun. So I appreciate you, dude, for
Of
sure.
course, it's a great time, and this is our time for the momentary partial sponsor part of the show to check out Lucid Charger here.
Yes, yes.
They-
This is the
they-
paper gain sister company, Lucid Chargers. Oh, by the way, yeah, Sharky, look at that. See, he's got the
Yeah,
one.
I like the case on these ones. These are
Uh,
nice.
I got DMs, people like, where can I buy those? You just go to your local shop, man. National distribution, you're good.
Yeah, easy. Papers worldwide.
But anyways, too funny, man, too funny. So what I'll say, we got a pretty light week last week. And we have some stuff to note. Not a whole lot of headlines, but some interesting stuff on deck. But let's go ahead and get us kicked off here, Shark, if you don't mind. So Netflix and chill, that's kind of like my theme right now. I'm just gonna change this layout a little bit. I mean, Netflix always kicks us off, right? Kicks off earnings season kind of with a bang. Unfortunately, this time to the downside, but thankfully, it didn't really have a huge market moving effect. At least Netflix itself. There were so many other things going on in the market, from geopolitical tensions to, I mean, rates in general, and the whole like pricing out the rate cuts. And in our newsletter last night, what we said was, it's very possible that the market, when you think about it, right, we rallied this whole year from the October lows, all the way up to last month on the idea of 6 or 7 rate cuts, right? And the whole time we're like, all right, well,
Yeah.
let's buy the rumor, sell the news. That's how the
Right.
market works.
Yeah. It was almost like that on a macro scale,
Yeah,
if
yeah,
you think
very much
about
like that.
it.
But as we get closer and closer to the actual news, we've always said the actual rate cut, if and when it happens, will likely be a sell the news event. And it doesn't mean it's like a sell the news, sell everything and run kind of event. It could be, very much like, let's say, like a Bitcoin halving, right? So a Bitcoin halving it's not like a sell it all and run away type of event. It's like it's not going to take off right now type of event, and slowly chops and accumulates till we eventually rally. So hopefully it's something like that. But it's all TBD. And in the process of reducing these rate cuts that are priced into the market, will we get this pullback? And at the end of the day, if you think that we're going to have rate cuts still to come this year or soon, quite frankly, this is just going to present a better buying opportunity than we had a couple months ago. So at the end of the day, what I would say is, like, get your shopping list out, right? It's like the Black Friday sales. And I think that was kind of the analogy that we had. Before Black Friday starts, you do a little prep work, you go on the internet, check out the best ads, find the stuff that you want, circle up your coupons, and then you go selectively shopping. But what's important also is that you don't want to buy something that's like on a stupid discount and you buy it and bring it home and it's just junk, right? So like, you don't want to buy, if it's on too big of a discount, well, maybe something's up, right? So we're still looking for good stocks at good prices, and I think there's a couple out there. But that said, it's not, if you are long into this dip, look, it's not the time to sell, because you pretty much, you're very close to it. There's not a whole lot of downside. You're at least halfway through. We're at least halfway through this at a minimum.
I think that's fair.
So regardless of your outlook, I think it's still time to start start looking for things to buy. Now, that said, we had a huge dip last week. And if you follow us again, you know that we measure average weekly ranges, average daily ranges. That has a lot to do with my personal trade style and the way that we come up with our targets and factor like trajectory and things like that. What I'll say is that after last week, the average weekly ranges have significantly changed, and now we're a lot high. We're almost double an average week's range than we were 3 weeks ago because of the last couple of weeks and finally breaking out of that prior consolidation, because we were going sideways for quite a while. So that week's range, and you'll see that in something like the VIX, where that starts to become priced in. So, couple other basic headlines. I think Bitcoin halving. It has happened. The event is over. We made it through.
And you've survived. You survived.
We survived. You know what I'd say is, like, if you get dip buys, I just mentioned, it's kind of like an accumulation event, I'd say. But one thing to note, this year is definitely different than the rest because we have a lot of extra inflows. We never hit the highs that we did. We never hit an all-time high before having an event. So potentially an outsized dip is possible. So I'm just saying it's not a sell, everything go away. It's all going to be dependent on what this new money does. And we have no idea. To me, that's what it's going to depend on. We have no idea really what this new money is going to do. So that I think is what the anomaly is this year. It's what drove it to all-time highs pre-halvening, which has never happened before. So, and again, there's only been 4 guys. So, like, to really say, hey, this is exactly what's going to happen is very hard to do. There was, over the week, I think this House foreign aid bill kind of got me. It's $95 billion that the House passed, $61 billion to Ukraine. I'm looking at $9 billion in forgivable loans. I'm like, oh man, makes me remember the good old stimmy days way back when. But this is the breakdown, right? So, like, they stuck
you're talking about in 2008.
Yeah, they stuck the possible TikTok ban in there. Sharky remembers that's probably the only stimmy check I ever received. It's like way back 2008. Never got a dime for COVID stuff. Don't worry. But yeah, this foreign aid bill is where the TikTok ban actually. It's not actually a ban. It's not actually a ban. It's more of like we will ban if China doesn't sell its stake within a year, and that's what it is. So just as an aside, Deddy, I do see your comments on snow. I will tell you what my thoughts are. I have a lot of thoughts. I have strong thoughts on snow. So that said, there's we had a ton of Fed speakers the last couple of weeks. Thankfully, it's blackout period, so no Fed speakers this week. So we're in the clear. Hopefully not a lot of Fed rhetoric, at least. But we do have some economic data is ramping towards the end of the week.
Well, and obviously the earnings, right? They never make it a clear path, right? Just
never.
They take away the speakers and they give you, the mega.
The busiest week of earnings, man. This is the busiest week of
earnings,
earnings, hands down. So next week is also very busy. But also, actually, Thursday, I believe it's Thursday. Rubrik IPOs, and of all the IPOs, I'll just tell you this much. It's going to be like, if you remember Zoom and Snowflake IPO, it's going to be like that. So
I don't even know what that is.
Rubrik is probably the best technology, in my opinion, my personal opinion, that is IPOing this year.
Oh.
Coming from enterprise, like, there were 2 products that were the easiest things to sell. All we would have to do is put, like, we call it proof of concept. I drop off a box and it would sell itself. And it was Palo Alto Networks, drop off the box, it sells itself. It's so easy. Or Rubrik, drop off the box, it sells itself. So, I mean, I worked with Rubrik way early days before, when it was, what was that, Frankie? What's up, Frankie? Frankie, if you ever get on a computer, we'll have you up here, man. But Rubrik, it's a data protection product, essentially. So people that get their data hijacked and all that ransomware stuff. So you need Rubrik. Basically, what happens if you lose something or something gets corrupted, you're like, no, I'm not paying your ransom. Forget about it. Delete, restore, and then it's instant, boom, fixed, right? But it's a lot more than that. I'll just say that. And then other notable headlines: Exxon has a higher market cap than Tesla. Officially believe that. How things have changed, Sharky. How things have changed. It's quite a wild ride for our old Tessie, man. And slashing 10% of the workforce. I think the note was last week from Elon, including apparently a 40-person advertising growth team, which I didn't even know existed. But
Right.
yeah, there it is. We've been talking seasonality a little bit. I did want to put one thing. So I think when people look at seasonality, yes, April's supposed to be the most bullish month of the year. But I would say here, we definitely, and we've put this slide up multiple times, you definitely want to take into account a presidential cycle, the election cycle. And technically, so this is June on this 4-year cycle. So we're basically here, very close. Evan's in the house, man. Paper games, yes. The 4th year of the presidential cycle is a little bit different. So this is what I'm saying, right? It's if you've been long this whole time, look, you're at least halfway out of the woods. At least halfway out of the woods. So think of it, the cup's half full. Absolutely get those shopping lists out. I'll tell you what, there's a couple that I haven't owned for a really long time that I'm very, very happy to start buying dips on. Apple, truth be told, I started way too early, but I already started buying that one. And yeah, I bought Tesla for sure. And Amazon is another one that's definitely on my list. But back to the rates thing for just a second. This is a screenshot from 2 weeks ago. And so this is July's forecast for the CBOE Fed Watch tool. And this is what the market is pricing in terms of rate cuts. And this is what I was talking about. Last 2 weeks ago in July, the market was pricing in 46, almost 50% probability that we have 25 to 50 basis point cuts by July. Moving forward, this is where we are now. We are near 60% probability of nothing happening in July. So the closer that this gets to zero, and the further away that they price out these rate cuts, the worse it's going to feel short term, but probably the better buying opportunity is going to present. Whether or not that's today, who knows, right? That's, I think, what I'm saying. But at the end of the day, nothing's really changing. And we're still in a presidential. Anyways, nothing's really changing except, earnings. And that's kind of what we're going to get to. So I think that said, let's take a quick look at what happened last week in terms of the economic data points. There was not a whole lot.
Hold on, we got to say hi to May. What's up?
May is
happy
in.
Passover, Mendy.
Oh, Mendy, yeah, happy Passover. Tommy's in the house for sure. Shalom. Papier and Sharky, yes. Grams May from Casey. Look at that. And Frankie, man. And Frank. You can't forget Frankie. Cannot forget Frankie.
The feed is delayed on the screen.
That's right. So it was a pretty light week. The only thing that's really kind of sticking out to me, and this is kind of off the wall, not stuff that we would normally talk about, but since it was light, I will bring it up. So if you don't know, when we get these oil status reports on Wednesdays, and I think a lot of people have been looking at the oil trade and possible continuation of the upside. There are two things that I want to look at. I want to look at the Cushing crude oil change, and I want to look at the crude oil stocks change. So crude oil stocks change, that's the commercial like reserves, if you will. And this is going up. Previous 5.84. Its consensus was 1.6. This is like your refiners producing more, and like their reserves are going up. This is the Cushing, Oklahoma reserve. This is like SPR type of reserve. And so prior it was in a drawdown, and we're slightly, just barely refilled it. So what we do know is that, the government wants to reload. Or look at this long, Sharky. The government did want to reload around 80, but it's not getting the shot right now. And oil, commodities, gold, silver, things like that, they were running a lot on a lot of these geopolitical tensions. And I think that goes in line with the rate story. It was like we're peak fear in that arena. Maybe not peak, it could be worse, but we're pretty peaky near term. And so it's going to get a bit shaky. And as any geopolitical tensions kind of settle, I think you see this settling in the oil pricing and market as well. So just know that basically what you could be seeing is some war premium, if you will. I will definitively say you're seeing war premium in gold on that pricing for sure. So I don't expect gold to continue. But I do really like a dip buy in the gold miners area this week. So looking for that to start basing out sooner than later, probably later this week. And then we got, the Philly Fed, the manufacturing indexes have been like extremely weak. And last Thursday, we got Philly Fed manufacturing index that actually came in at 15.5 on a consensus of 1.5. So that's very strong. It's just completely different than what was priced into the market. So we'll have to see. This is just by region. So that region did well. We'll have to see the rest of them. I know Dallas is doing really bad. We'll have to see like what the New York area does. But those two, Dallas, New York area, have been doing pretty poor. So this is kind of like TBD. It's a little all over the place, but there's a green shoot there, and then existing home sales. Well, we know.
Wait, did you mention the GDP?
So GDP. This is last week. Moving forward this week.
Okay.
Yeah.
Okay,
so this week, nothing really early.
If they wanted to know what happened last week, they should have joined in last week when we went over it in real time.
Sure. All right. Well, noted. So that'll save us some time next time. But this week, really, it's pretty mellow. We have some bond auctions. We got 3 6-month today. Not really going to do anything. We have 2-year note. We have a 5-year note. I will just say there's still liquidity hitting the market, right? So we're still issuing debt. So and we still see people buying it, believe it or not. And probably more on the short term side of that. But that really brings us into Thursday, where we get the first look at GDP. So the way this works, when you get GDP, you get 3 views. So GDP Q1, first look, Q2, second look, Q3, and then final. Or 1, 2, 3 views, revision, and then final. The market will likely react on whatever this first like issue looks like. But I'll just say, don't expect it to be legit. I mean, this number, when you get a look at this first look of Q1 GDP, it could be all over the place. And when you do look at GDP, you're just like, the curve is just like, it's just a straight up and to the right type of angle chart. So that's kind of what the Fed sees that. And then the second charter is really like the labor situation. So that's really why, Powell mentioned, it's going to be dependent on the labor force, right? So if labor is strong, there's no need to lower rates. And with GDP incredibly strong, at least that what it looks like right now, again, there's no need to lower rates. And if it's too strong, this is what happened. We started getting these, economists talking about actually raising rates, and you're like, what? And therefore, there we go, pricing out all the rate cuts. So all that said, that brings us into like the pinnacle of the week, and that's Friday, right? Fed's favorite gauge of inflation. And that really is because it's the spending metric, right? So everything that we see in coming into this, whether it's CPI, that's in the past, right? This is what it is, what had happened. PPI, this is what it is, what had happened. PCE is spending, right? And inflation's all about, let's say, velocity of money. So if people are spending more, then it's likely prices stay high and that reflation trade continues to stick around. So we'll have to see, right? And I think that's if it's lower, then it's like, okay, inflation's coming back down. So how the market reacts, that's what we'll see. Earnings. So we're going to start off fresh. We're going to have a Q1 start here. What I wanted to do when we look at this, as much as I want to be like super bullish, this is the one area that has me a little bit concerned. So if you look at the screen, this is the last 6 quarters of the Dow 30 components that have reported. This is quite literally last quarter, quite literally the best record I have ever recorded. So is there a potential for peak earnings? There's a potential for peak earnings. That's what I'd say. So that's the only thing that has me a little bit concerned. Also, this quarter, the first time Amazon's going to report as a Dow component, so we'll get to see that.
That's interesting.
Yeah. So it might change a little bit of this dynamic. We will see. So as the Dow 30 shifts as well, these things shift too. So hopefully we nix out some of the bad ones. But we'll see. This is what we got on deck, though. I think Verizon, we already had a nice little beat and skeet. If you don't know what that is, big old up move in the pre-market. Just and then last I checked, it was like down 2%. So laughable, I know. Unfortunate. Oh yeah, I think it's getting worse. So yeah, Verizon. Ooh, it's getting a lot worse. Now down 4%. Yeah, this is definition of beat and skeet. So just keep that in mind when you're doing this stuff. And I think so. Tomorrow after the close is Tesla. We got Visa, we got UPS before the open. Again, if you're planning on trading anything around this, just make sure to note whether it's BMO before the market open or AMC after market close. That's going to determine when you can take your trade, because that is everything. So Tuesday, Tesla, that's the larger one. I don't know that it's going to be a big market mover. If you're in RTX calls, what I'd say is get out, because you're going to get crushed before by tomorrow morning. You're going to get crushed. So this is what I say. If you're in any of these trades, just know when these things report, right? If you're in Freeport, you're going to get crushed tomorrow. If you're in Lockheed, you're going to get crushed tomorrow. If you're in Raytheon, you're going to get crushed tomorrow. When I say crushed, IV crushed, meaning volatility is going to come back in. Whether or not the price like overtakes that volatility crush, that's TBD, right? That's playing your price action. So we shall see. Boeing Wednesday morning. I don't know that there's anything that they could say to move that stock one way or the other, to be quite frank. Actually, Meta is always a big mover. So I think this is the one. So the way this is set up, we don't have any economic data until Thursday and then into Friday. And then on the earnings front, we don't really have anything until Wednesday afternoon after the close, which really doesn't start hitting the market until Thursday morning. So between now and Wednesday, I think it's all like anticipatory, and maybe the market starts to front run a little bit. Maybe the market gets excited about a Meta earnings or a Microsoft earnings or an Alphabet or Google earnings. And then rubber hits the road, right? So then Meta like actually reports, which, I'm rooting for him. I'll just say that. I'm definitely rooting for him. Microsoft, look, not usually a big mover. I would totally, I'm going to sell like at the like puts and calls on that guy probably. Google, though, this is the TBD. I've always rooted for Google on their earnings report, and they have consistently let me down. So that's all I can say. I don't really know. It's going to be a little funky. If they do well, I mean, that's going to be a major shift. A major shift. That's what I would say. Let's see. We got some question. Why are financial performing better than the overall market? I think, Bank of America, like Wells Fargo, they were pretty beaten down too. We'll take a look at some setups also. I think you can see it just in the raw setups that we have right now.
Also, if they're going to keep interest rates higher or maybe even possibly raise, that's good for banks because they're making more money.
Yeah, so banks are all about net interest income, right? And that's really their bread and butter. I think it's going to come down to, JPM in terms of net interest income. They had actually guided a little bit softer than the market was hoping for, so they come down. But the market has not had high hopes at all for like Citigroup or Wells Fargo or Bank of America. So I think that's a little bit of like reversion in that regard. So as long as the story is rates stay higher for longer, it's actually decent for larger cap financial institutions. But anyways, Sharky, I hear Miss Cleo in the background. You ready?
Is it time? Yeah, okay. We've finished all the earnings. Let's look at the cards.
Let's see. Where's she at? I think she's. All right. So, it didn't switch over. Damn it. Here he is. There we are. There we are. So we got. Forgot what these are called. 7.
That's the theme card, the 8 of Cups.
8 of Cups. All right. So we got an 8 of Cups, right? And then we have. What is that? This looks like an Egyptian. This looks like a Roman person.
It's the Chariot.
Chariot with 2. What do you call it? Sphinxes down below. Then we have a 6. Is this a 6 of Swords?
It looks like it. Yeah, 6 of Swords for Tuesday.
6 of Swords for Tuesday. This does not look like a happy card. Like, I don't know, man. This does not look like a happy card. Maybe we're off and we're I don't know. Sun looks happy.
The Sun looks happy.
We know this card is like absolutely brutal. This is you're waking up in the nightmare underneath a bunch of swords coming down on you in your own pool of blood. And then the Lovers to close us out for the week.
Hey, there you go.
Which I feel like the Devil card is better than the Lovers card, right?
Well, we'll have to see. We'll see what she says, and then I'll chime in on some of my thoughts, and then we'll.
All right. So she does do a crypto reading, but we don't do that here. But anyways, this is the theme card for the week. 8 of Cups. Crypto do this Friday night as part of the weekend read. It led to a weekend rally that continues to pick up steam. This is fitting because the card indicates a changing moon cycle, which happens on Tuesday. Tuesday we get a full moon.
Yeah.
Oh, is that a thing? I think it's a thing, right?
Yeah.
This also signals a big pivot and change in energy. Since we've been getting killed lately, this could signal a new rally phase. So I don't really take her direction per se, but definitely the setup. She kind of crashes it. Also, moving from last week's Knight of Wands to an 8 says we could retrace last week's effort in part. Very likely. Yeah.
So what I'll say about that theme card also, which is interesting, is that sometimes it means, in another way, it's also known as indolence. That's kind of like when things get stagnant and energy is blocked. So, we've had this huge down move, and with that potential blocking we could also interpret as that potential blocking of that momentum. Could be, something that we can look into in that sense.
I think that was pretty much the first line of our newsletter. Was like,
it also can go with a little change and transition, maybe walking away for something. So it could be, another
walking away from something. We're walking away from the bull market, dude. No.
Well, maybe we're walking away from the down move for a little. Again, it's these are fun, but it's always up for interpretation. But
always up for interpretation. So Monday, the Chariot. This card prepares us for big movements at a rapid pace.
Oh yeah. I like the Chariot.
Yeah, we're traveling somewhere, and we probably won't stop for gas. Well, we already stopped for gas. We don't have a lot of worthwhile data for this card on equity side. So okay, but it's mostly bullish for crypto plays. Yeah, she's a crypto person. Play this like a strong trend card, one way without change to get in. Trade Momo, not mean reversion. Okay. Well, so far
usually the Chariot also with the travel has to do with like willpower too.
Oh, look, Sharky's getting in
now. So drive, kind of those are kind of the themes. So we'll see. Again, maybe interesting card there, and also usually holds a little bit more weight because it is a part of the major.
Yes. So Tuesday,
those are a little stronger. We always want to pay attention when we see the
swords are.
No. Any of the like the Chariot or the Lovers.
Oh, the ones that don't have numbers.
Have more power.
Yeah, so I'm the layman's guy. The ones that don't have numbers.
Yeah,
I'll just go with that. So 6 of Swords. It's fitting on the day of the full moon. This is the ugly one, or second ugliest one. We get a card that signals a transition away from difficult times. Transition away from difficult times. They were leaving. That's what it was. The migration.
So here, or maybe we're having some extra.
This card says we're cutting our losses and moving on to new land. Either we cut our losses on the long side and just decide to trade short, or we're going back. We don't know yet. But we're focusing on on forward, right? Okay, better yet, this card historically positive. I will see, which increases the chances of a tailwind for stonks. Look for energy change here. So that's reversion. It may not be big energy, but it's the start of something new. Okay.
Right. So also, if we think about the picture on the card, right, he's in that boat, but think about it. He's also crossing a river, you know, right?
Yeah,
So he's
that's this one.
moving from one place again to another, although it might be tough.
Yeah,
You
this is
know,
where like you've got hypothermia, you feel like you're dying, but there's land ahead, and maybe you're going towards the sun of a better future.
yeah, okay. So we'll see.
All
I've
right.
overcome the fears of crisis. We'll see.
So Wednesday, this could be like Wednesday night, right? When Meta reports, so we have like a big gap up. That would be crazy. The sun usually, like in the middle of the night, sun usually arrives to burn away the shadows, occupying the darkness, but it can also signal euphoria, and need for an ego check. Yeah, this is a rally that, to me, that I read. I've seen this card. This is the one that's a rally that should not be swung into, right?
Right.
I
It
bet
could be.
if we've been circling near the top of the range, then I'm expecting some retracement lower. If we're near the bottom of the range and struggling to bounce, then today brings that bounce. Note that crypto's widow of weakness begins here. Oh, I didn't read the crypto one. Window of weakness begins here as well and extends into Thursday. Thursday, this is the brutal one. We're having nightmares. So this is setup. This is the setup for the week right now, right? Is that if you see a Wednesday rally, I think that's like or a Wednesday dumper. Miss Cleo saying, don't jump into that trend. You might want to wait to the end or maybe the following morning and reverse course. That's what I'm reading so far.
Could be, right. Yeah. It could.
Yeah. We're having some nightmares and can't sleep, probably because overnight selling that leads to a gap down. If that doesn't happen, look for a flush early in the session. This Wednesday through Thursday weakness window matches crypto exactly like crypto. I expect to find strength around lunchtime for a possible bounce. Okay. We may finish flat.
Meta doesn't beat.
Yeah, maybe we fit, or the good old beat and skeet. It's very possible. We may finish flat. You mentioned that, Jerky, when we were texting the other day. I was like, yeah, I could see Meta beating handedly and then selling off. It's very possible. Friday is the lovers. So this card is supposed to arrive when it's time to kill volatility and pacify the waters. So take Friday. Well, I'm taking Friday off, boys and girls. That's a wrap, right? However, it sometimes leads to aloofness and possible weakness. Yep. Off day Friday. Look for a choppy and low energy day where we don't do much. Maybe we're burning option premium after a wild week. Interestingly, we have major icon on Monday, Wednesday, and Friday. If both Monday and Wednesday are positive, then Friday will be too. Well, Monday is not going anywhere yet. Then Friday will be too. If Monday was positive and Wednesday was negative, I still think we can close strong. So I think net, this is like setting up for a mean reversion type of week, really, but a muted bounce. And I'll just tell you guys from a chart perspective, I'm going to take this stuff down for just a bit. From a chart perspective, it was a big, what's the saying, right? We always say markets are either resting or running. And we just had a big run. That's what's true, right? We were consolidating for 45 days, a month and a half. We went absolutely nowhere. Finally, we get a big move, outsized move, which changes the average week's move. And we could retrace a bit, right? So how does that look? I think this was actually in the newsletter, but an average week's range. I will say my gut says that we actually have a muted move, so probably half of an average week's move, quite frankly. So maybe it'll like this 504, 503 type level to me. But a full average week's move and on SPY 496 is absolutely crucial. If you know our NFP levels, 496 is this February NFP high. And so right now, when you read these levels, you think of it like right now the market's pricing us all the way back to February. So think about February for a minute. What was going on in the market? Should we be higher or lower than we were on February? and that's where we are today, right? So is that a discount? That's what the market's trying to discern right now. So right now we're back to February levels, and there's not a whole lot to take out the rest of the year. But that said, as long as we can hold over 496, then a retracement is in order, and it could take us all the way, quite frankly, as high as the 50-day simple moving average around 510 for an average week's range if we do hold that weekly range in full. If not, expect a muted move, and that could be a 2-week kind of thing over 2 weeks to get to 510 if we can continue on, assuming we have a good geopolitical front, assuming we have decent earnings reactions, assuming we have let's say clearer Fed forecasts. Market does not like uncertainty. So whether or not it's good, bad, or indifferent, I don't think that really matters that much, as long as it's a clear forecast. And we won't have that right now. So it's going to have a troubled time. But beware if we get there, and especially if we get there in short order, there's going to be a lot of people ready to sell that got caught in last week's sell-off. And they're going to, if we get there too fast, they're going to be hammering. Right. Yeah. And so that's what I would say. That's what this price action sets up for. Quite frankly, the whole week sets up to be kind of what we used to call a day trader's dream, but a swing trader's nightmare. Right. And, that is trendless, choppy price action that, quite frankly, it looks really good at the close, but doesn't actually continue on through the following days or sessions. But intraday, you can get these really wild moves that are amazing to trade from a day trading perspective. But if there are any swing traders out there, this is not really the week for you. This is probably a week to make money selling premium. That's what I would say, especially after a large outsized move. This is a week to make your money selling premium as an options swing trader. So that's my take. But for now, as long as we're holding 496, my take is then you can stay bullish here. But if we lose that 496, we should see 489 in very short order. That's retracing that February NFP level, and then a full week's range takes us to about 480, give or take. I think that would be enough for this week, but I don't think that would actually be the end of this, if that makes sense. I do see if we lose 490, 489, we have a very heavy volume shelf, like low volume pocket down here all the way to about like 475. And this momentum would, like, this is like that last, we call it a break of structure. You would fill the volume shelf really quickly if that happens. Taking this shot right now, I know where Sharky stands, and I know where I stand. The risk to reward taking this shot right now is horrible. Like, I wouldn't even think about taking the shot right now. Yeah. Like, this new money short here, no good. Right. No good. But if the setup is that you have a chop like this, or you have a quick move to the upside and you tag that 50-day and you start to fail. Right. Now we're talking. That's your shot. Right. Yeah. So meantime, what does that mean for us as traders? Actually, it means like possibly counter trend moves, counter trend trading. If we know that the trend is down, which right now, let's be clear, the trend is down. And if I'm going to be trading counter trend, what I will say is I want to kind of target half of those typical moves, right? Half of a daily range. And that's exactly why I was saying, if this is an average week's range, I would actually start targeting half of that. So half of an upside if I'm in a downtrend, which we are in a downtrend. You can't say that's not a downtrend.
Well, if you inverse it.
Yeah, if you inverse it, for sure. But there are going to be a lot of bears looking for a lower high just to step in on you, right? And so that's why you can get great intraday upside moves. But again, you just want to be really careful. I'm not going to be taking any long-term bets unless, like, it's already beaten down and I have a whole nother thesis for it. Don't think it's going to get affected by what's going on with the market or what have you. But just be careful. Right, just be cautious. This is a week to be cautious. The setup is for a day trader's dream, but a swing trader's nightmare. That's what I'd say. And quite frankly, the probability once you lose this 20-day, 50-day simple moving average that you see at the 200-day, very high, very high probability. Where that 200 is by the time we get there is probably a lot higher. And quite frankly, it's probably right here around that 470, 475.
It would line up perfectly for it to just be right there at that volume shelf.
It absolutely would, right? And sometimes the market is legitimately that simple. Watch this for confluence. If I take this low and I take the high, it's going to be a 50% retracement, right? It's going to be right there. There's way too much confluence around that 475 area to not want to go long. So if I see that, which I don't know that I will, but if you do, I mean, fire sale. Let's go. Right. But in the meantime, that's what I'm saying. You're halfway there. You're already halfway there. So if you've been long, this is not a time to sell either. Right. So this is not a time to sell. This is a time to start looking to buy. That's what I'll say. All right.
Well,
let's get into
this. Realize what are we about? I thought I posted this. I don't have it in front of me. I'm trying to look for it. We are also down about 5% on since Friday. Now, obviously, we're only about 4% since we bounced up a decent amount. But you also have to keep in mind that we see, I think, a 10% correction once a year, and 5%.
This is nearly 6% from the highs.
Yeah, and 5% is pretty common. Usually, can see them about 3 times in a year, 3.5 times.
Yeah, I think Qs are actually a lot deeper.
They are. They are definitely deeper. I think
so. Qs are much closer to that discount level, like 8%. Yeah. So Qs are much closer to that discount level than SPY is. That's what I'd say. So even on Qs, you take these weekly, like prior all-time highs. Yeah. And I'm just going to hide these drawings just for a minute. And all of a sudden, it starts to look pretty normal.
Pretty clear. Yeah.
Right? Pretty clear. And so, you could do the very same thing with SPY. Pretty clear, right?
Mm-hmm. Yeah.
480.
Everyone's looking at the 480. Since everybody's looking at the 480, like specifically, we probably drop a little bit lower.
That's what I said. So 475.
That's what I think. I'm with you on that 475, 474 area.
Yeah.
I saw a bunch of people play 480, 480, 480. I'm like, stop posting about it now. It's definitely not going to bounce there.
Yeah, no, it's never that simple. It wasn't as simple as 420 either, right? Like that last time. But anyways, everybody remembers 420 if you've been around long enough, I guess, if you've been a lot longer than a year. But we are very much there, very close to there on the Qs. So the Qs looking a lot better. And again, from these, November lows, October, November lows, if I were just to take this, of course, that's going to happen. If I let me turn this non-farm payroll levels off for just a minute. So if I just took this from here to here, we're very close, right? From that November low. That's a fib. Yeah, just swing low to swing high.
Yeah, from the yearly fib, right?
Yeah, yearly fib. So, well, it's not a full year. It's from November lows. But
you're going from November. Okay.
Yeah, for this new trend. That actually lines us right up to that 200-day also. So,
from that one, does it put us in the golden pocket?
I don't know that we get that deep. I mean, something would have to be wrong to go that deep, right?
We're almost thinking we're just below 50% already, I think.
Yeah, but this one, I'm around 400. It would be where SPY lands and this lands. Worst case scenarios, to me, worst case scenarios, barring any kind of like other geopolitical unforeseen events.
Yeah.
So that's where we are. I think, look across the broader indices right now. SPY, Qs are still the weakest. Unfortunately, Qs are still the weakest. Diamond's having the best bounce so far, followed by IWM, followed by SPY, and then Qs holding up the rear. Right. We look at the dollar. We've been talking about the dollar quite a bit. This is a very toppy formation, right? And we were talking about that 105 level possibly coming in. It's so far, we'll see, but we want to see this one at least.
Oh God, yeah, I was looking at that flag on there.
Yeah, we want to see this one start to run out of steam. Otherwise, that might be, and it looks like it's at least going to go sideways for a while. But that's going to be your first cue to be like, whoop, Careful.
I think it might come into maybe 105. I'm looking to see if it comes down into 105, 105.50.
Yeah. And this is the rate story, right? So TLT is a long-term treasury, long bond. I'm looking for this 88, 89 level to hold and then break up back up through 90. So far, this looks decent, right? And I mean, we're holding here. We're not going anywhere just yet. But if this starts to go back up, that means longer term bonds are coming back down. Reflation fears probably subsiding. That's probably kind of come in on Friday, quite frankly. And then gold. So gold, I would say, honestly,
Got dusted.
I would be. So I threw a short butterfly on gold, like sold both calls and puts last week. I was a little too early on the strike. Had I done like one series later, I would have been like, boom, money. But I don't think this goes any higher right now. I think I would be short upside premium on gold, quite frankly. And possibly even a little bit of short, because this is the war premium coming down, right? Doesn't mean I'm bearish, right? But I think it's absolutely time to like get a nice little pullback here. It's a little overextended. Silver could be in the same spot, right? I'm still long silver, but this view today, maybe she bounces. Maybe they bounce a little bit and continue to chop. But we'll see. I would still be long dated stuff, but I would be short dated stuff, if that makes sense. So so we'll see. Wow. That's all TV. I think that whole story kind of like subsides a little bit.
UAL 3 days now up since the earnings beat.
Yeah. So that definite mover here. I know we had some questions. So first question I said I would get to is Deddy, and that was on snow. So here's my deal on snow. And I'll just tell you guys this right now. I love the tech, but if you're part of our group, you know where I stand, right? And if you really follow me, you know where I stand. And it's not in the same place as a lot of my peers. I do not stand with a lot of my peers on this viewpoint of snow. I love the tech. Our views are all similar, but where I differ is that it's in the leadership. So when I think about the best companies in the world, I think about people like a Steve Jobs or a Mark Benioff, and I think about those people are definitively not heavy in the weeds technologists. And this guy, this new CEO, he's probably the best in terms of the technology that they could have picked. But I don't want that. I want that in my CTO or my chief technologist. I want a businessman, a visionary at the helm that has other people working crazy hard for him or them to get things done. But I don't want them working right in the weeds. So that's kind of TBD, right? It's not happened, but it hasn't happened yet either. So it's still a show me story on that front. That said, still love the tech. We have to see whether or not this guy is the right guy, right? From a business perspective. I'm not talking about a technology perspective. I don't think there's any argument here that guy knows his stuff and is the right guy from a technology perspective. But that's not what I care about from an investment perspective, right? I've worked with a million companies that have amazing tech leaders at CEO level, and they all die out, right? And it's because of what I'm talking about. It's a different skill set in terms of what you have to do. Not saying it's not this guy. I am saying it's TBD still. It's still too early. So while I like the company, the timing might be off. And what does that mean? Do I buy this dip? I think you get it lower. I think it's possible that you get it lower. So if you're oversized, I'd still be cautious. My biggest thing is Datadog. So Datadog, never been a fan of Datadog personally, just because of my own personal experience. Jassy says, hey, cloud optimization, which is what Datadog does. Cloud optimization is kind of coming to an end. If Datadog cannot shift their business over to the AI front and that workload and that data stack, then they're in deep trouble. And if they can, they're going to do great. And Snow is going to be a beneficiary of it. But if they cannot, Snow is going to get hit. And that's when you get your dip buy on Snow. And that's probably going to be like 125s. So can you get a dip? Yes. Yes, you can. If your time horizon is more than a few years, you could give it about this. right? Like that's what you need to be like focused on. If your time horizon is more than a couple of years, you should be drooling because you could get a better price, but be in here, be in now because this may be it also. So it's all TBD. That's my hopefully that makes sense. Hopefully that helps, guys. Did my perception on the company change at all from a no, has not, right? It's just the leadership is and continues to be TBD in terms of the business vision. Because I haven't heard anything other than buying some stock, right? So next question, will you comment on oil metals? So I think we just did, right? GLD SLV, I think takes a chill pill from a gold from a war premium stance. So that leads me to GDX because I do think that as long as equities hold a bid in this market, then gold miners actually do really well. Rough start to the week. I think this could be presenting us a pretty good buying opportunity, which is exactly what I was looking for because I was not long options in GDX. And this is what I was saying. If I'm going to pick something, I want to pick something I don't think is really going to be affected by SPY and like all that other shenanigans. And this on GDX is a huge back test. All of this here, like big volume shelf. It may need to come in just a little bit, and I may just wait, right? Depending on how deep this goes. I want to see gold like at least settle down before I start taking some real shots. If I take shot right now on day one, it's going to be tough. But this is right off the 20-day simple moving average. We have a 50-day crossing over the 200 simple moving average. Where both of those, all of that's under the 200 week, which is the purple line. I think this setup is really crazy. So it's very juiced. Distance between the 50 and the 200 are expanding, crossing in the right direction. Pulls back. If we get another dip, I think that's where I slam. If I see $30, I'm going in. And that's what I'd really like to see. I want to see the distance here between this 20 and 50 day, this guy, tighter, right? If this can come in just a little bit, and then I can hop in right before it expands, boom, we're good. $40 is my target. So something like that, as an example, it's not going to be super long dated. Can you start it here? Yeah, for sure. But just know that's halfway to my target. That's where I want to be. That's why I'm a little bit cautious. That 200-week simple moving average is a big deal. That's at 32.20 today. All right. Sharky, you got anything? Sharky.
I'm really just I'm trying to suss out here what what are we going to get as far as that retracement? If we do see the retracement, I think that looking from what we're seeing on today's price action, we're like, I agree with you on I don't have the 496. I've got 495.50 area. I mean, pretty much 50 cents, pretty close.
Bother.
I think, and it looks like we are trying to close. I'd really like to see a close over this 498.50. I think would be encouraging. That would put us at closing in the upper 25% of Friday's range. I think that sets us up nice. I mean, even just as long as still we're, that 496 is just that line in the sand. But I think that would be the most constructive thing. I'm really just trying to suss out, the same thing where, if we do get the counter trend rally move, where does that lead us to? And then where do we want to also be ready to either take profits on that short-term trade, and then also look to see if it's going to be a daily higher low or a weekly higher low. And so I don't know what it's going to be. Obviously, the markets have a lot of we have to repair a lot of damage. So I don't know if they're strong enough to get up into that weekly higher low. And it's something that me and you discussed a little bit before, via text before the show. I'm wondering too about, if there, and you also alluded to this, people that are trapped, maybe late longs that are trapped on a shorter time frame, are they going to be selling into any earnings report that and then basically makes them muted? Apple or Meta might beat it, might run up, and then late longs say, hey, I need to get out now, and it kind of stops everything from in its tracks. So I'm a little bit concerned about that. I'm just interested to see how it works out, and that's kind of just my viewpoint. Overall in the market, I'm really just kind of interested and focused on what this next move is going to be.
Yeah,
We'll
for
see
sure.
how high they take us. It
Yeah,
looks like
we'll
they're
see. I think you could play the upside as long as we get it right. And I think what I would say is just be mindful. It's likely counter trend. You know, when I look across the board, here's my other view.
Oh
So
yeah,
I
and
have
also what do we say? You know, on something like this, it's a counter trend trade. We're not looking for all time highs. We are understanding, respecting the bigger picture price structure, and also you know what I'm talking about is catching bulk moves to the up and down. You know, also our jobs as traders and it really isn't to do that. You know, patience always we talk about patience pays. If you want to go with the trend, if you're bearish, sit and wait for
sit
your
and
time
wait.
to attack. Yeah,
Yeah.
you know, and that also, I think you brought up a great point about that possible consolidation overall, considering the run and rest cycle, you know, of the price delivery. So we also, you know, we made a huge move, 400 points in the tech futures, you know, so it is also very likely that we see that as well. So I think that that's also a great point that you
Yeah.
brought up.
So this is just like a sector view, like in industry view. Someone had brought up like PG&E or PCG and utilities. I think this is if you're bullish, if you're ultra bullish, you don't want to see this setup, right? This is utility.
Or you
This
want to be bullish, right? We've been
yeah, or
looking
you
at
want
this
to be bullish in the right places, right?
defensive sectors, right?
So
Utilities, materials.
defensive areas of the market, that's utilities here. XLP is staples. This is really bullish setup, right?
Yeah.
The very bullish setup, right? There are tickers in here that have not moved for years. Look at this. When's the last time you heard anyone talk about General Mills, right?
Right,
The
yeah.
setup is screaming
Yeah, let's go
bullish.
long Campbells.
Yeah, screaming. You know, I can look at remember Coke was dying, right? Pepsi was dying. Hello. Sorry. Hello. You know, so just be aware there's still a lot of defensive flows in the market, right? XLV is healthcare, typically defensive, just now starting to get a little bit of a bounce, right? So they had our healthcare had already been on a huge rally, so that makes sense anyways. Nice pullback. This could be an area that regardless of where you are longer term, you might look at an area like healthcare that could be in for more of a sustained bounce, even if
Mhm.
the rest of the market continues on.
Right,
Um,
right, right.
and that
And
might
that's a
be
great thing
something.
to also to think about if you are trying to catch a counter trend trade. Maybe you don't want to do it, you know, on tech, which has been the weaker name. You know, for
Yeah,
example, maybe you're going to get a stronger bounce in something like financials or you know something like that. So that's another thing to definitely keep in mind that if you are trying to or if you have the thesis of a counter trend trade, maybe it's better to do that if you're doing it on an index, one of the stronger indexes, and if you're trying to do it on a individual name, then you want to focus on those sectors that have been showing relative strength. You know, we were just talking about UAL continuation,
yeah,
you know, the financials earlier with Wells Fargo and things like that. But that's it for me. It's my one
yeah, yeah.
o'clock. I know you're going to go over a couple other things,
I'm
but
gonna hit a couple more of these
yeah,
questions here. I think you know there's some downside setups that if the market does reverse, you do want to know about.
yeah.
Namely, just you could look at what's going on,
All
right?
right,
If
Brad, bro. I'll let you go over those. Good to see
you
you.
did, adios.
Take care.
Um, all right. And then, you know, like if you guys are around or you're looking like miners were a possible downside setup, I think that sorry. I'm good. I'm good. So I was gonna say, so Berkshire has hopefully, can you hear me now? Should be good. Berkshire has earnings at the end of next week. If you're in like end of May calls, can you hear me now? I think you're good. You should be good. Yes or no? I think you're fine. If you're in end of May calls, it's not really a big earnings mover. That's what I was saying. So like last quarter, look, even if you get a nice little pop, it quickly retraces, or a dump, right? Retraces and slowly reclaims, or a pop, it'll quickly fade, and then eventually come back. Same thing here, like pop, fade, right? Like nothing burger on earnings, pop, fade after. So I would just say, like, it's not usually super high volatility. You get this little retracement. I think you got most of it back already. So I'd just be kind of cautious. I'd be taking like 3/4 down ahead of the print, like by Friday, or if not today, and then maybe look to add later on. And then Apple. So Apple is here. I'm on it, right? So I'm on it right here, right now. But, I think that, so when we talk about simple moving averages, this is 20-day, 50-day, 200-day here. We have a 200-week over here. I think we're a bit extended, like this distance is going to come in. It's probably going to bounce a little bit. We'll have to see, right? The worst case scenario, the dip puts you right around 150s and around that 200-week super simple moving average. A little bit of a broadening formation, you take that off, but it's really this. These topping formations. Tag those, come all the way across. This is very likely going to land you right around its 200-week simple moving average, and right into that worst case scenario 150s. But that's worst case scenario. For now, I think you're in a good spot to start buying. If you get a pop, this is that setup, right? Where this week it sets up for a pop. But then we are going to report next week. So pop into earnings. If you get to that 175 level, I would take like protective measures ahead of the print. And then we have the developers conference coming way later. So it could be a journey. Look, this could come down. Here's the thing on Apple. If you're in, there's no reason to sell, because this is the same kind of thing as like a snowflake. Like this down shot, if it does happen, first of all, isn't guaranteed. And if it does happen, look, if you sell here and this happens within half a session and it comes back within a full session later, you may not get a better entry price, but the chart may say, hey, look, it's there. But if you blink, that's what I'm saying. If you blink, you'd be like, oh crap, I sold higher, and then I'll have to come back in later, and I might have missed my re-entry. And that's tough. It's tough as an investor. So this is a tough spot, right? But this is where I'd be like averaging. This is where I am averaging personally. Let me see. BRKB, did I got Tesla? Live on Edge. Man, we got a Tesla bear here. Tesla. What I can say about Tesla is that she is in a clean as can be downtrend, right? We'll just take this on a weekly time frame. And I'll just take all these kind of simple moving averages off. This is just a clean downtrend. It's a wedge. It's not a head and shoulders. It's not any of that. It's just a downside wedge, right? So like, can we break out of it? Yeah, we totally can. But have we yet? No. And we're not going to until we get to earnings, right? So we're beyond this 150. We're coming in here. It's kind of like TBD, right? Like all this is that lower 120s. I cannot look over here. I think if you start looking at all this stuff, look, when you start looking at charts and you start looking at things that are 25 years in the past, it's not relevant. So you don't want to go too far back, right? Because I know people will look at this and be like, oh, we have gaps over here. I mean, you're talking about 25 years ago. It's just a different company, right? Like, it's just a completely different company. So it's not, I wouldn't go that far back. I would just, as most you can do is this 2023 kind of area. And as far as that's concerned, it's are we better or worse? Is Tesla better or worse? Worth more? Is Tesla worth more or less than it was in 2023? That's the question that really like that investors are really having to tackle, right? Personally, I have a view, but other people will be like, no, it was never worth that much, right? I think it's just up to the individual. I guess I could do this, but I really don't want to. I really don't want to move my lines around too much because then I'm just doing my own personal. I don't like moving lines around too much because then you finagle things to make your view look better. But yeah, I think whatever happens, and it's all going to come down to earnings from here. I think that's what's fair. That's what was missing. I need the magnet. But yeah, I would have to recapture that 150, 145. Sorry, let's see. It is 148, but it's not out of the woods until it's out of this descending wedge, and that's going to be well over its 50-day at 180. So it's still in a longer term downtrend for sure. I think we are good. We're good. Yes. Cool. Do you mention anything on Netflix? Netflix can. So I think as we get into earnings season, peak earnings, we get a lot of chop. You may get continuation, right? But it's not necessarily right away. I think Netflix. So I trimmed some Netflix. I'm still long Netflix, but I would just say that there's a level on Netflix right around this 520-ish area, right here, right, where we have a ton of consolidation. We're basically right back into this. So I think something like this is viable, right? To say, hey, look, we can dip into this supply zone, demand zone rather, and see what happens from there. Okay, Carvana, and this will be the last one. How's Carvana looking is the question. So Carvana. Carvana's looking close. So this, whoa, you guys. Okay. This one might be ready. So Carvana last week has gone nowhere. We got earnings out May 1st. That means we probably have options that we could trade this week. I don't like to trade next week that capture earnings. If it makes a move ahead of earnings, that's what it is, right? I think, here, I would take this little wick, 66, right? You have this huge volume shelf, but it's from an earnings gap, so it doesn't have to come in. As long as this is below its 50-day, it's a choppy week setup, right? So it's a very choppy setup. You could start seeing a lot of charts do what's like this megaphone type pattern. If it doesn't break down, I wouldn't press this bet. I would wait till I got a better shot closer to my 50-day up here and then look for that. But it's very likely, as long as this is below its 50-day moving average, this does not look like a good chart right now. But if it reclaims, it's fine. The only thing here is when we talk about these simple moving averages, these basically momentum indicators, the distance here, remember, we want to come in when the distance is expanding, not contracting. And, the short of this, not long, is that the distance between these two is coming in. So it's contracting. So I really would rather wait till these are really tight. If you look at why some of these had the movement they did. Look how tight this was on SMCI. I mean, that's as tight as you can get, right? Look at how tight this was on ARM. It's as tight as you get, right? So when I get that type of setup, which we do not have yet on Carvana, it may come. I'm looking for that to really tighten up and then pounce. So timing is more important than price action, right? Okay, fine. Adobe, please. Adobe, please. So same thing. I'm not looking for a big movement because again, these are going to be coming in. It's at a good spot. That 200 week, that's my purple line coming into play one more time. This is challenged. This is more, it's in a downtrend. Now, if you get these bounces, just be careful and cautious. There's still a lot of sellers in the way. I love Adobe. They just have a lot of this stuff that's like headwinds, right? Whether it's Meta coming out with a product, Apple possibly releasing new products that could compete with them, or OpenAI AI releasing products that competes with Firefly, right? So Firefly is their AI product. That's really the future of that platform. I think that has to it has to hold strong in its own right. But other than that, SPY's looking good. We look like upside for now. I would expect this to possibly continue to 2 days, give or take. But it's more like red opens, get bought tomorrow, possibly Wednesday, and then who knows? Because we hit a ton of earnings Wednesday night. Thursday, get hit with the first wave of economic data. Thursday night, we get hit with Microsoft and Google earnings. And then Friday morning, we get slapped in the face with PCE. So enjoy it while it lasts. Don't wish too far. And that, I think, is my that's all I'm going to say, right? Big Shotty. I just replied, I just replied 20, 50, 200, simple moving averages, not EMAs. Locked on the daily. No hourly, no, none of that. Cool. All right, guys, I'll see you out there. I'm going to take a little break and then we'll hit it. Cool. Adios.